Buy Asian Paints, target of 3,500 rupees, current price Rs 2,955. We maintain a buy on Asian Paints, APL, with a revised price target of 3,500 rupees. Dominance in the decorative paints industry and focus on becoming a complete home improvement play will keep valuations at premium, currently trading at 63.0x its financial year 2023 earning per share. Phase-wise unlocking in various states will lead to a gradual recovery in painting activities in the coming months. Home improvement segment to recover from second half of financial year 2022. Price hikes and operating efficiencies would reduce raw material inflation pressure. On margins, OPM likely to improve from second half of financial year 2022. Structural growth story of paints industry remains intact with shift from unorganized to organized sector, especially in rural India, shorter repainting cycles, rapid urbanization and momentum in construction/real estate activity. Asian Paints Limited's, APL's, revenues clocked a CAGR of 7% over financial year 2016-21 with just 1 year of double-digit growth financial year 2019, growth of 12%. Lockdown affected first quarter of financial year 2021. However, in the next 9 months, revenue grew by 24% led by strong pent-up demand. The second wave of COVID-19 will impact the growth momentum in first quarter of financial year 2022 as virus has reached the hinterland. However, with recent drop in COVID-19 cases and easing of lockdown would lead to resurgence in demand for decorative paints. We believe urban markets to recover faster than rural markets. Metros saw strong recovery in fourth quarter of financial year 2021 and momentum continued in April. Thus, state-wise lockdowns will lead to temporary break to the momentum. Further, APL's management is confident of achieving double-digit volume growth amid a stable business environment which will largely be driven by 1. Strong growth in Tier 3 and 4 markets, as consumers shifting to branded products and upgrading to emulsions from distempers 2. Expansion in product portfolio availing large options for urban consumers to improve their homes and 3. Waterproofing and undercoat products are gaining strong traction due to lower quality of construction. Waterproofing products will be one of the key growth drivers in the medium to long term. The category was largely institutional but with more and more top players coming into space with consumer-centric products has generated retail demand in past couple of years. We expect APL's revenues to clock a CAGR of 13% over financial year 2021-23. The sharp increase in input prices would put toll on margins in the near term. Though the company has hiked prices by 2.8%, it will not be enough to cover entire inflation and the company might opt for further price hikes looking at the demand environment. This along with operating efficiencies would help OPM improve in the coming years. APL's balance sheet remains strong with cash and cash equivalents of 3,600 crore, operating cash flow/EBITDA stood at 73 to 75%. Maintained by with revised PT of 3,500 rupees, APL's management is targeting double-digit revenue growth in financial year 2022 with strong recovery in sales from second quarter of financial year 2022. This will also be supported by improving prospects in key international markets. The company's dominant position in the domestic decorative paints business and focus on becoming complete home decor play in the long run gives us a visibility for better earnings growth in the medium term. We expect APL's revenues and PAT to grow at CAGR of 13% and 17.5% over financial year 2021-23. The stock currently trades at 63.0x its financial year 2023 EPS. We maintain our buy recommendation on the stock with the revised target price of 3,500 rupees.